Hello and welcome. Everyday trader dreams of that perfect chart, the one that leads to consistent profits. But let's be honest, few people talk about the emotional roller coaster that happens behind the screen. The real battle isn't with the market. It's right here, in your mind. Today we're going to dive deep into the psychology of trading. We'll learn how to manage fear, greed, and most importantly, how to handle losses without losing yourself in the process. Because mastering your mind is the first step to mastering the markets. Let's start with the fundamental truth. The market is neutral. It doesn't know you exist. It doesn't care about your goals. And it certainly isn't out to get you. It's our own emotions that make trading personal. The two biggest culprits are fear and greed. The fear of losing money can paralyze you, making you miss good opportunities. On the flip side, the greed of winning can make you reckless, causing you to take oversized risks or stay in a trade for too long. These two emotions are just two sides of the same coin. They lead to common emotional triggers like revenge trading after a loss, overconfidence after a big win, or panic selling at the first sign of trouble. The key to consistency is emotional detachment. As the saying goes, you don't trade the market, you trade your beliefs about the market. Your success depends on keeping those beliefs rational and disciplined, not letting emotions cloud your judgment. To better understand this, let's break down the emotional cycle of a typical trade. It often starts with hope. You've done your analysis, you enter a position, and you're filled with positive expectations for a win. But then, the price starts moving against you. Hope quickly turns to fear. You start to worry about your capital, and your heart rate goes up. If the loss grows, you might enter a state of denial. You tell yourself, it's just a pullback, it'll turn around. You refuse to cut the losing trade, even when your plan tells you to. As the situation worsens, denial gives way to panic. This is the most dangerous phase where you make irrational decisions, like adding to a losing position or just freezing completely. Finally, you hit a breaking point and accept the loss, closing the trade. Afterward comes a period of reflection where you have the opportunity to learn from the experience. Being aware of this cycle is the first step to breaking it. By recognizing these stages as they happen, you can intervene before your emotions take control and force you into a bad decision. So, how do we handle losses in a healthy, professional way? The most important shift in mindset is to understand that losses are a part of the business. They are not a personal failure. Every professional trader, no matter how successful, has losing trades. The difference is they don't let it destroy their confidence or their capital. They manage losses instead of avoiding them. This starts with a solid risk management plan before you even enter a trade. You must know exactly how much you're willing to risk and where your stop loss will be. It's also crucial to define a daily loss limit. If you hit that limit, you stop trading for the day. Period, no exceptions. This prevents one bad day from wiping out your entire account. Another powerful tool is a trading journal. But don't just log your entry and exit points. Write down how you felt during the trade. Were you anxious, overconfident, scared? This helps you identify emotional patterns. And finally, learn the art of stepping away. When you feel overwhelmed or after hitting your loss limit, close your charts. Go for a walk, meditate, exercise, do something to reset your mind. A healthy relationship with loss is what keeps your capital and, more importantly, your confidence alive for the long run. Building on that, let's talk about forging a winner's mindset. This isn't about being positive all the time. It's about building discipline and resilience. Your trading day shouldn't start by frantically checking the pre-market. Instead, start with a calming routine. This could be a few minutes of deep breathing, journaling, or simply setting your intention for the day. The goal is to begin with a clear, focused mind. A huge mental shift is to focus on the process over the profit. Your goal isn't just to make money. It's to execute your trading plan flawlessly. If you follow your rules, you've had a successful day, regardless of the financial outcome. When you review your trades at the end of the week, celebrate the moments you showed discipline, not just the trades that made money. Ask yourself, did I follow my plan today? If the answer is yes, that's a win, even if the trade itself lost money. If the answer is no, that's your cue to analyze why and fix it. This approach builds the emotional discipline needed to stick to your plan, especially after a tough loss, which is when it matters most. To wrap this all up, remember this. The best traders don't fight the market. They flow with it. They don't chase perfection. They master control over themselves. Trading is as much a journey of personal and emotional growth as it is a financial one. If you can master your own mind, you'll be far ahead of the crowd. Here's a simple exercise to take with you. After every single trade, win or lose, take a moment. Breathe deeply 3 times. Then ask yourself one question. Did I follow my plan? If the answer is yes, proceed with clarity. If the answer is no, stop. Take a break and review why you deviated before you place another trade. This small habit will build a foundation for long-term success. Thank you so much for joining me today. I hope this has given you some valuable tools to work on your trading psychology. If you found this helpful, please give this video a thumbs up and consider subscribing for more content just like this. Happy trading and stay disciplined.